Well, there is just a bit of drama in the cryptocurrency world this past week, particularly in regards to the world of stablecoins. And within all of this, there are some observations that I've noticed. And as the news continues to play out, it does bring about what I find to be some kind of comical irony. But within the comical irony, there are certainly some talking points that hopefully open up your mind to some discussion points, because I realized, and I should note, I'm not here to badmouth cryptocurrency. I'm not going to sit here and bash it. In fact, I'm actually going to give Tether a whole lot of credit, because I think what they just pulled off, or seemingly have pulled off, is quite the compliment. But how they pulled it off, or at least in my opinion, why they were able to not crash as a stable coin, reveals the irony and reveals the talking point that you cryptocurrency fanatics hopefully at least consider. Now, I admire somebody that's passionate about something, but you always want to be a little careful of not being too passionate about something. And in the world of cryptos, I feel some people might be a little too passionate, and this, in my opinion, shows exactly why cryptocurrencies may not be as fantastic and as great as what you think they are. Again, that doesn't mean that they're bad. I'm just saying maybe open up your mind to some considerations here. So to set up the context, and I'm sure most of you crypto people are already aware, but for the people that aren't in the world of crypto, just real quickly, there are coins out there called stable coins. And just to keep it simple, a stable coin is essentially like a bank account. The idea is, hey, put your money here, put your quote unquote cash here, and it'll be tied to the dollar. So that way you're not losing money as far as the dollar is concerned. But like I said, just look at it as a cryptocurrency bank account where you can store your money. And there are multiple stable coins, but the third largest one out there just completely has fallen apart. And just to show you how bad it was, one of the parts that's tied to it, which I'll get to here in a second, but one of the coins that is tied to that is right here. You're not reading that right, 0. You're not reading, or you're not missing that either. Down 99%. So literally an absolute crash for this. And to show you how things are supposed to look, let's go to right here, Tether. So see how it's 1.00? That means one Tether, is worth $1. So just that's what it's trying to do. That's what it's trying to accomplish, that you want to see that at $1. But let's go and look at this stable coin here. .11. That's not good. That is essentially like your bank account absolutely collapsing. And what you thought was $1 is now worth 11 cents. I'll say that again. That's like putting $1 into a quote unquote bank account. And now when you go to withdraw that dollar, the bank's like, here you go, here's 11 cents. That's brutal. That is an absolute collapse. So that's the collapse that has happened within, this stable coin. But now let's look at what's gone on. And again, I want to give some credit where credit's due, but you can see here that the world's biggest stablecoin regains the dollar peg after 3 billion in withdrawals. And these withdrawals came in just, I want to say less than a couple of days, maybe even just one day. Now, it did actually sink down as low as 95 cents. So again, in that situation, that would be the equivalent of you putting $1 into a bank, and then when you go to get that dollar back, the bank gives you 95 cents back. But that has been alleviated because, as I just showed you, it's back up to $1. So now if you were to put $1 in of Tether, and then you go to the bank, say, I want my dollar back, they would then give you $1. Now again, it's not US dollars. This is all just to kind of make the stable coin and the idea behind it a little bit simplified. But it's back to where it needs to be after, again, and this is where I want to give 3 billion in withdrawals. So essentially, it was kind of like a little miniature bank run, but the coin was able to withhold it. It was able to maintain its peg, which, again, credit where credit's due. Well done. But what's the difference here? And this is just my speculation. But I think there's a lot of credence that goes into this. But what exactly is the difference between Tether and this other stable coin that completely failed? When you look at, okay, well, why did one fail? Why did this one hold up? And let's look at, a little bit the next layer of how are these actually backed? So let's first take a look at the coin that absolutely collapsed. And this is just, I like this article. They do, I think, a good job of just kind of explaining it very clearly. So the one that collapsed is terraUSD, is a so-called algorithmic stablecoin, which its peg maintained by financial engineering and an arbitrage mechanism that encourages traders to profit by keeping the token in line with $1. Now, what that means is it's basically made up of code. It's basically made up of cryptocurrency algorithms, all that sort of stuff. And that's where the Luna, why I showed you that, that's gone to zero. I wanted to show you that because that is what's part of the background of this terraUSD stablecoin. Is it's just backed by essentially computer code, digital stuff, if you will. It's not backed by anything physical. It's not backed by anything quote unquote real at all. It's literally just, and I love the term, financial engineering. In other words, coding. And all about algorithms. Okay, so it's just pure codes, pure digital stuff. And I'm not going to pretend like I know and understand every nook and cranny, but I do understand enough to realize that it's just based on nothingness in the sense of it's just computer code that it's based on. Okay, well, what is Tether based on? And again, Tether is the one that has survived, that it started to get a little shaky, had 3 billion in redemptions, but then got back up to that dollar. So Tether, as opposed to this one that collapsed, is supposed to be safer, backed one by one by assets. Now I say supposed because there's controversy out there what actually is backing it, but it doesn't really matter because the perception is that it is backed. So this is not a video, and I don't know enough to say I don't think it's backed, but I'm not making any of those claims. I'm just saying the perception, what is supposedly true, is that it's backed by assets. So yet the company that runs Tether has been opaque. So that's where they're just saying about, okay, maybe they're not totally, transparent, but that's besides the coin. Again, perception. So the company issues this assurance option on its reserves. But let's keep in mind, okay, so what's actually backing this coin that has survived? Is it a bunch of other cryptos such as Luna? Is it other, coding and algorithms and all that sort of stuff? Or what is it? More than 80% of its reserves were held in treasuries. Cash. Wait, cash? It's backed by cash? I thought cash was evil. I thought cash was the dumbest thing ever in the world of cryptocurrencies. Certificates of deposit. Well, that's even more cash, which I should say treasuries are also cash. Do you see the irony here? And oh, look, money market funds. 80% is in the stuff that cryptocurrency is constantly railing against. That's what it's backed by. And in my opinion, that is what has kept it from absolutely crashing, because it's actually backed by real assets, by physical assets. Cash isn't real. Yes, you're right. It is just a piece of paper. But the perception, the idea that you can take that cash and go buy something physical with it does create more of an asset here. And then there are, the other 20%, including secured loans. So again, loans are tied to a physical asset. That's why mortgages are awesome, right? Because it's a way a bank can say, yeah, we'll give you a loan, but we're going to secure it to your house, a physical, real asset. 3.6 billion in corporate bonds. Again, corporations, those are like real things. They're bonds and precious metals. Do you see the irony here? I'm not trying to generalize all crypto people, but I know crypto people out there that are like gold, precious metals, stupid. Why would you do that? Bitcoin's way better. This cryptocurrency is way better. But yet all of these things are what is backing and being used to back a stablecoin, which just had a run on it of 3 billion and was able to sustain it. So again, good job. But I just don't you find a little ironic that what is backing the coin that has survived happens to be a bunch of things, several of which is kind of like what cryptocurrency goes against, the cash and the precious metals and all that sort of stuff. So once more, I started with it and I'll end with it. I'm not saying that this is proof that cryptocurrency is a scam. I'm not saying this is proof that, you should just completely abandon cryptocurrency. I'm just saying that consider the fact that these assets out there that maybe you are constantly ragging on or think are worthless or think that are terrible, maybe they're not as bad as what you think they are. Maybe a little diversification in your life may help out quite a bit. So I'm not into all in of anything. I'm into diversification. I have, dare I say, cash. I have real estate. I have stocks. I have bonds. And so I have diversification, and I would encourage you to do the same. And if anything, worst case, you just get a little kind of ironic chuckle out of all this. But if you are hardcore, then yeah, consider, just be open-minded. And who knows, maybe, not maybe, I'm sure there's going to be somebody that's like, no, Clay, it blah, blah, blah is why it survived. And okay, I appreciate your opinion, but in my opinion, which I think is more than reasonable, it's just ironic that the one that crashed was backed by coding, algorithms, crypto, that Luna, but the one that survived is actually backed by real, tangible, physical assets. So maybe just be a little open-minded here, but it's been a dramatic week. I mean, that Luna down to 99% gone. That would not be a pleasant way to go into your bank and say, I'd like to pull some money out. Okay, here you go. We'll give you a penny for every dollar that you put in. That would be a rough situation. But again, I don't want to make this seem like it's a crypto bashing video, because it's not. All props is due to Tether. But then again, it's crypto. Maybe by the time this video goes out, Tether will be crashing in. But I don't think so. It seems to have regained its footing. And again, so well done in that regard. So if you enjoy these types of videos, if you enjoy these, we'll call them current event types videos, please let me know in the comment section. Hit that like button. Check out the channel as a whole. And if you like what you see, there's a good variety of videos, and I'd love to have you as a subscriber at that point. But yeah, get out there, be a little open-minded. Consider that maybe there's more available to diversify than just crypto. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up, as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.